Let me take it across to Sandeep, because Sandeep, you have been quite vocal about your criticism per se of the move that we have seen in the IT companies, because it seemed like in December and January they have run up way ahead of the expectations and a slew of upgrades have come in from analysts as well. Do you think that this time around there'll be a vote of confidence coming in from the managements, or it'll be the other way around?
I don't think that the way the macro environment has turned out, the possibility that there'll be a further downgrade in estimates is much greater than an upgrade in estimates. No, but that doesn't stop analysts becoming more bullish after the results and calling it the worst as over result, which they have been doing for the last 5 quarters. So I think the same thing will be.
Okay,
Yeah.
so you're not expecting much when it comes to the IT earnings, more of the same. But let me just get a quick chart check as well. Nuresh, from the IT pack and the frontline names at that, what does the chart check suggest?
So, in terms of charts, if you look at Infosys, the stock has been sideways, not been able to cross the highs made in last of the whole year of 2022-23. So, till the time it doesn't cross 1600 odd levels, the trend remains sideways. And on the downside, 1350, 1400 remains the support. So, not really a great trading band. Same with TCS. If you look at it, every time the stock has come closer to that 3800 to 4000 mark, we've not seen much of a follow up, but structurally looks a little more better. And at the same time, when we look at what is happening in the rest of the names, you have something like HCL Tech, which trades at an all-time high. You have a Birla Soft trading at an all-time high. So there is discrepancy in terms of performance across the mid-cap, large-cap, and the small-cap IT names. Overall, the risk remains in terms of the small-cap and mid-cap IT names, which have hit new all-time highs and gone up 100%. In that, any surprise on the earnings side could see a correction. So for now, this is a season where you don't want to
Out last 2 days.
But there's merit because Aisha, the stock has underperformed so much. It's crazy. Like it's done worse than even the IT stock where things have gone actually like and downhill. So there was a time. So it was a time for comeback. That's what we are seeing now. We could see Reliance outperform in the near term, and this entire going green thing actually is not something for which you invest, because that actually will lead to further decline in already low return ratios of Reliance, because the returns in the green investments will come after a very long time.
Still buzzing higher, 27.17 on Reliance Industries. In fact, let's hear out that soundbite of Mukesh Ambani on the sidelines of the Vibrant Gujarat summit just yesterday.
Reliance will contribute to making Gujarat a global leader in green growth. We will help Gujarat target to meet half of its energy need through renewable energy by the year 2030. For this, we have started building the Dhirubhai Ambani Green Energy Giga Complex, over 5,000 acres in Jamnagar. This will generate a large number of green jobs and enable production of green products and materials, and will make Gujarat a leading exporter of green products. And we are ready to commission this in the second half of 2024 itself.
Okay, point taken. But of course, it's Polycab and the entire wires and cable segment which is seeing a lot of movement today. So you have RR Cable, which is down in the trading session. KEI2 is coming under pressure, apart from Polycab, which has seen a dropping of almost 20%. Though Havells is the one which is outperforming today. It was holding up in the green. Let's go across to Sharad to get a sense as to how this entire story has panned out and what's the latest development. Sharad?
Well, yes, important development coming in for Polycab as block deals have started coming in. Almost 6.93 lakh shares is what we are tracking. Amongst 5 big deals have happened already. The buyers and sellers are unknown. And importantly, if you look at the important shareholders who are the institutional shareholders, the names include Vanguard having almost 1.2% stake, with BNB Paribas DSP Investment, and even BlackRock having stake in the company. Also, Norges Bank and Tata Asset Management are also having exposure in the company. Now, let's look at the valuations, how it's Polycab is placed. And of course, at the peak price of almost 5,758 rupees, The P stood at 53.5 times. Now do remember this is a 12-month forward P, and currently after the correction that is coming to at almost 33 times the valuation part. Now of course the stock tracker, if you look at it over the last 5 days, the stock is down 26%, and 1 year basis still the stock is up 48%. But overall, if you look at it, in the last 5 years itself, the stock is up 500%. Now, of course, we did talk about the valuations part, and if you look at the other peers itself, KA Industry is also cracking in this trade, but still actually kind of going valuation wise 36 times, a bit higher when it comes to Polycab, while RR Cable also comes in between the 38 times range. The biggest competitor and the place where we actually compare the valuations is Havells, and which is trading at still at expensive levels of 52 times its 12-month forward PE ratio.
Corporate governance has to be of the highest standard, irrespective of the business or the module or the wealth creation. But such things definitely will not be, cannot be kept under the carpet. And I think they will have to come out with a large part of disclosure. Now, I am not privy to what has actually happened, and it would be wrong on my part to comment. But I definitely think that corporate governance at 22,000 has to be the key. So be watchful of, that is why we are saying certain mid caps have also made a lot of noise. Be watchful of the actual facts and start. That is what we are saying. Be overweight on the index because you have enough large caps there which have cushion of corporate governance, visibility, transferability, and everything which keeps you participating, and where market will again reward you over time.
Welcome back. Taking a look at the market, and it's holding on steady, actually building on to gains after that sharp knock that we had seen on an intraday basis. We have recovered most of the lost ground and back above that 21,650 mark. Individual names which are doing cartwheels right now: MRPL up 18%, Easy Trip Planners up 18%, Chennai Petro is the other one. So a couple of these oil and gas names definitely in focus. Kunal, what's your take on these? MRPL, Chennai Petro, these refiners per se hadn't moved earlier. What would you suggest as a stock recommendation right now?
Well, difficult to recommend at current levels because of the way these stocks are poised on their indicators after a 15%, 16% up move for these stocks, and an RSI of almost 88, 90, 89, for these names individually on the daily time frame. The risk reward is a lot more skewed. But the other point is that these stocks have not gone through any kind of a major correction in the last 5-6 months of the price rally for themselves. So I think Chennai Petro was almost at 350, 375 from those August lows, and the stock is now at 850 plus levels. So the run up is quite steep, but the only concern is that the short term indicators are extremely overbought for these stocks, especially after today's up move. So which means that we have to wait out for a price wise consolidation or any kind of a dip. Maybe a 4%, 5% dip could actually be a good starting point if that comes along the way for these stocks.
Sandeep, I want to talk about Polycab, the stock that we were highlighting just before the break. I mean, we've seen the kind of market cap erosion which has happened in the stock. And I mean, rightly so. You've got so much HNI and mutual fund concentration into this name, and it's all been in front of our eyes, the way the IPO happened, the kind of subscription levels and the kind of gains the stock has made since. But still quoting at 33 times on an FY25 basis. Of course, it has more expensive peers like a KEI or an RR Cable or even a Havells, for instance. But if Polycab were to fall another 20 odd percent from here, would you be a buyer in the stock?
Have to say mostly unlikely because of the fact that don't really know what the earnings will be now next year. Because once the kind of irregularities are caught, then we don't know what else is there. And once it become more clearer, then whether they'll be able to show this kind of growth which has been showing for some time. In contrast, what many of the other bigger players have been showing, how does that growth coming? All of that is to come. And many of these wire, again, I'm not sure of the management. So I think we need to be careful. They should just look at the dip from the top. They should look at where the rally starts, how they are moved. Complete contrast to the entire consumer or durables basket.
Fair enough, Sandeep. We'll let you go on that note. Got you on a bad line. Hopefully, we'll speak with you soon enough.